Welcome to Share Talk, the only podcast where investors come first.
We're joined today, Regency Mines, RGM, on the AIM market. Guys, would you like to introduce yourself, please?
Andrew Bell and Scott Kaintz.
So, nice to catch up with you finally. We're in London. What would you say to your shareholders? You've been a bit quiet lately, so what would you like to say to them?
Yeah, there's two big subjects. Of course, with Regency, one is coal and the other is the nickel cobalt. Should we kick off on coal?
Yeah, sure. Let's talk about the coal. I think that's been probably what people have been anticipating. And I think if I were to summarize it in a brief period, it's worth the wait, and the wait is almost over. We haven't been able to maybe say as much about our developments there. But we have been working hard behind the scenes, and I think that's coming good here in the near term.
Yeah, I mean, you have to consider that our partner now is a private company, and private companies are particularly careful with their money. Legacy Hill has done a lot of due diligence on prospective targets, and then the target would be something that would have some debt attached, and any lender who's exposed to 100% possible loss for 2 or 3% margin is going to want even more due diligence done. So it's really taken the better part of a year for the targets to be analysed and looked at. And our joint venture with Legacy Hill aims quite clearly for getting high quality metallurgical coal assets, positive cash flow, profitable, no legacy problems, no underground mining, and developing that to a stage where it's big enough to be listed on the main markets in the United States. So we set up the joint venture, we're funding it, and we think that then there'll be quite rapid announcements about investments in assets in the United States, which will please the market.
Yeah, and really which will be the same investment thesis that we utilized last year. I mean, this is the met coal story in the US, I think popularized by Trump and others, and we think it has a lot of legs left to go. Met coal prices remain strong, markets look good, and we think we're picking up assets for the right price at the right time, with a lot of potential to build on them.
And remember, the metallurgical coal in the United States, when the coal market was bad, in a way the baby got thrown out with the bathwater, in that people may have wanted to reduce their use of steam coal for power generation, but you do need coal for steel making. That metallurgical coal, which is high grade, trades at quite profitable prices, and the market for it is not only in the United States. Those good coals from the US, I mean, high-grade metallurgical coals and specialist coals are sufficiently rare that the market for them is international too.
So, would you say as a company for Regency Mines, you're going to be quite active maybe over the next 6 months? The news flow is going to be a bit more flowing.
I think...
I'm trying to be polite about this.
Yeah, it's a fair point.
Yeah. But on the coal side, I can see a stream of announcements at the time that things actually happen.
Exactly.
And at the end of that stream, when people look at the picture, they're going to be quite excited.
Yeah.
And then they'll be developing the picture over the next 2 years.
It goes on beyond that, I think. But I mean, it's the nature of the beast when there's commercial negotiations over assets. Obviously, we can't discuss with any specificity.
Yeah, of course, yeah.
What they are, where they are, who's involved, for obvious reasons. I mean, the negotiations are ongoing, or have been anyway. And I think now we're getting to the point where we can start to peel back that onion and reveal what's underneath and why it was all worth the trouble.
And I think there is also a problem is that the stock exchange was in a period recently, particularly the resource sector, where there were some companies making announcements all the time, all speculative value, no production, and people got used to this idea that constant announcements were what fueled a share price rise. Our strategy is that we want to have assets that are going to be in production, that are long-term assets, and the coal is something that is going to fit that mold. We're going to be producing coal and generating cash flow from coal within a relatively short time. I'm fairly confident of that. And as for the other part of our business, nickel, cobalt, well, nickel's had a bear market 2 years longer than any other major metal. It's coming out of it now. Cobalt, which is a part of the product mix, not enough to do the project on its own, but combined with the nickel can make a terrific project. We have one of the biggest nickel cobalt projects in the world, and it's beginning to come back to the stage where it's highly interesting.
Indeed. And in fact, Andrew was out there a couple of weeks ago meeting with our partners and really trying to get down to business on how we're going to take that forward and unlock the value that's inherent there in the JORC that's existed for some years now. So I think the time is right to finally start to take that forward again.
So you can say, we're in old energy, which is metallurgical coal, which is used as that, of course, in the metallurgy, but also for its heat properties, combustible properties in steel making, and it occurs in energy in carbon and methane, which is a new, clean form of traditional energy. And then we're also through nickel and cobalt in two of the key components for EV batteries and new batteries that are going to be a part of any energy revolution.
Yeah.
Whether it's storing energy developed through traditional means, or whether it's storing energy developed from renewables.
Yeah. So we think, again, owning a Regency share is going to be an exciting proposition. It'll be buttressed by production with a lot of exposure to the upside in the sort of exciting battery metal space. And we think that makes us unique here on AIM.
Gentlemen.
Of course, we set up a subsidiary called STEC that is looking at some of the technology implications of battery metals, so we understand it better, to give us another part of our business. So we're not just looking at producing the nickel and the cobalt, we're looking at the kind of nickel and cobalt people are going to need. We're going to look at the way it's used in batteries. We're going to look at the general storage concept and how it's going to work, both static and mobile batteries.
Yeah, so again, you get exposure to battery metals in the ground and then some of the end use cases and what we think are kind of exciting applications of batteries today.
And for STEC, we're getting these meetings with people who have technologies or know-how, PhDs in materials handling, some very, very interesting concepts.
Yeah, that I think having that exposure opens these doors. And again, it helps us understand what we have as well in the nickel asset, because you sort of start to understand where it's going to be used, how it's going to be used, what the proportions are going to be. So it's come together a lot.
But obviously that's a subsidiary that we'd expect to float off quite soon. And I think there's one battery technologies company planning listed in London. Well, it's going to be another.
Yeah. Exciting stuff.
Okay, gentlemen, thanks very much for your time.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.